So I don't know if you're a fan of, I used to be a big fan of Family Guy, and anyway, the lead character in it always has there's this one episode where he gets this episode called What Grinds My Gears. And that's a little bit how I feel. I want to talk about the kind of the overreaction or the sensitivity to what happens with Bitcoin and just in general. So this is something that I think is worthwhile touching on every now and again, once or twice a year. And so I'm going to say kind of what really grinds my gears when it comes to discussions of Bitcoin. So first of all, let's talk about the idea of cryptos. Cryptos are here to stay essentially as long as we have electricity powering our equipment. So as long as technology is here to stay, cryptos are here to stay. Now, we have to remember that they were born out of the idea of kind of mistrust in banks and governments being so tied together with our money. And so we want this alternative option, just an option, where alternative currency option. Now, remember that gold, historically, gold has value because we've assigned it value and we use it. So we've used it for so long, we don't question the value. And, you know, where we are today, banks currently, you know, our money is really just digital in the banks already. But that's not really it. It's a matter of kind of control. And so because as we become more and more global, we want the ability to at least go, listen, some of my wealth, I don't want the banks holding on to it. I want it to be mine. And so cryptos have essentially, that is the story of cryptos. That's why they're here to stay. And they're going to be here forever. Now, what's interesting about it, it's a massive market, and the banks, as greedy as they are, want a slice of that. This is they're a creature of greed. That's what they do. And this is not about, this session that I'm doing is not really about conspiracy theories. It's none of that at all. It's about being practical. The fact is these things exist. Banks want and governments want a slice of that. It's not going to go away. And they recognize that their window into that is that some individuals are nervous about their money not necessarily being held within a bank. And so this is really the opportunities. They're going to create a digital currency and they'll offer that. So where we're going to go in the future will be one of two categories. There'll be a fork in the road, and essentially you will be offered almost a bank-backed crypto versus a rogue or non-government regulated crypto like Bitcoin or whatever. And so that you'll have those choices between the two. That's their market. They want a slice of it. I mean, it's billions. It will be trillions very quickly. So that's a market they want to get into. So that's another reason why they're not going anywhere. And that's it. So that's all I really wanted to get to put that in place before we kind of go ahead and have a look at it. So there's a lot of language that's being used these days. There's a hashtag on Twitter called Bitcoin Crash, and I'm looking at the search results. This is the language that's being used. But I want to go ahead and have a look at the charts, and I want to take you through why it's silly to call this a crash. Let's explain why the language is being used, but why it's inappropriate. The other thing I want to say before I move to the charts is that articles like this is the irony. Articles like this are created because there's an interest around this, there's a curiosity around this, a mass market appeal, if you will. But the irony is, in order to become successful at almost anything with regards to investing or trading or making money, this is not really the solution. When you read stuff like this, it's just garbage. It doesn't really help you progress. So just keep in mind that, you know, people always think that if I have a Bloomberg terminal or if I read the Financial Times, this is really what's going to help me become, you know, a sophisticated investor. And it's not. That is not really where the success comes from. Okay, so let's go to the charts and have a look at it. But the whole point is that a lot of this stuff really doesn't help the situation. It's just meaningless educational, not entertainment fodder that gets put out there. Okay, so here we are looking at a daily, weekly, and a monthly chart for Bitcoin. And on the bottom left-hand side, we've got a 4-hour chart. So the 4-hour chart is more for day traders, just to get a sense of what's going on. And so we had a really nice, for example, we had a really nice breakout to the downside, where price now has the potential to head down towards 30,000. So keeping in mind that if you're an investor, there's two ways to look at it. If you're already if you're already exposed in this financially, if you already have money in Bitcoin, you're going to be feeling as though the value is coming down. Now, so just keep in mind that cryptocurrencies are very new. You know, stock markets have been around for centuries, and cryptos haven't. They've been around for around about a decade, and really they've only captured the public's interest for like the last 5 years. To put it into perspective, Tesla has really only hit mainstream interest in the last 2 years. That's how young it is. It went from nobody giving a shit about it to suddenly, Elon Musk is the world's first trillionaire. So, we have to be patient. You have to understand that when a market is relatively new, the liquidity and the volume transactions, and it's already doing very well, but it's going to be a little bit kind of choppy. And so as with everything else these days, the kind of moves that we see in the market are much bigger. And that's because, well, there's a lot more people on the planet. There's a lot more people that technology has allowed a lot more people to get access into the market. And so the transactions and the volume and the kind of moves that happen are a lot more exaggerated than they would have been 10, 15, 20 years ago. So moves to the upside, moves to the downside are exaggerated. Also because there's a lot of people attracted to this. This is almost an amateur's market. There are pros in it, but make no mistake, it's largely amateurs in retail who are getting involved in it. And their reactions, their greed, and their fear and panic amplifies the moves to the upside and to the downside. And so the swings are just going to be wilder. 10 years from now, if Bitcoin is still the granddaddy of cryptos, we will see those swings will not be that bad by comparison. Okay, so that's something we have to keep in mind. The swings are going to be big, both to the upside and to the downside, and we need to accept that as a characteristic of a newer market until eventually it's got a lot of history behind it. Now, I said that if in 10 years' time Bitcoin is still going to be the granddaddy of all cryptos, if you were around in the 80s, you would remember VHS and Betamax had a bit of a battle. Betamax was actually a better quality video machine. A video machine for the millennials was kind of a tape that we stuck into a box and we could record things from TV and we could rewatch those. There was a battle and there was a marketing battle, and VHS won the marketing battle, but it wasn't the better product. Betamax was. And Betamax actually remained the standard in the television industry until about 10, 15 years ago, maybe even still today. I've actually lost touch with it. I'm not in that industry anymore, but it was still around in 2010. And so the reason I bring that up is that it's possible that something such as a crypto such as Ethereum, which has an added dimension to it, could end up taking over. So in other words, Bitcoin could just hit a market saturation, people lose interest in it, and it's not as popular in the same way that maybe people suddenly decide they want silver instead of gold, and one thing just takes over. And eventually that's the problem I guess in the world we live in. If people lose interest in you, you effectively die. So because that's where the popularity comes from. So I'm just saying that in 10 years time, we could have a form of cryptos as well as a name that doesn't exist today, that's maybe the major one, and then that sticks around for a while, or perhaps it could still be there. So we just have to accept that. For me personally, I would have some exposure in each of them for myself. This is not financial advice, let me be clear here. We're just conversing here, thinking out loud, philosophizing about cryptos. So it's going to be interesting because, and on that journey, there will be rats and mice, the smaller cryptos that are going to be weeded out and will die off, and the ability to list a new one is going to get more difficult just because that market is going to become more competitive. So let's talk about what's going on. So if we look at the monthly, we've had, our very first actually, this is the interesting part. This was the very first Bitcoin bubble. This was in 2017. Then it sort of came back out, tried to get back up, and ultimately broke out. During this period, nobody was really talking about it much. It was similar to the 2007-2009 global financial crisis. People got burned. They didn't really want to talk about it. Then it started breaking up. And this is where people start hearing about it when it goes to what we call an all-time high. So in other words, when the value here broke the previous high, all of a sudden it's in the news, everybody starts talking about it, they've forgotten about it in the meantime, and this is really where it started to move to the upside. This is insane, because there were billionaires that were created during this move. You can only imagine what happened here. And so we then had a bit of a correction. Now we have to have those. A market cannot keep going up. It cannot. No stock in the history of the world has ever continued to go up, back up. They can't. It's just impossible. Anyone who wants to just get in and take some profits, eventually they'll get out. There'll be things that spook people. Some people run out of money. There's reasons why eventually the market has to just come back. There just aren't any more buyers, and some people eventually get panicky and they take their money out. So you get these corrections, and it's a healthy correction. So at this point, we get a normal, much needed, healthy correction, right? At least a 50%. So if you think about the market as breathing in and breathing out, low tide, high tide, just this kind of normal rhythm that happens to the market. When it picks a direction, which in this case is to the upside, it kind of does a little bit of a 2 steps forward, 1 step back, 2 steps forward, 1 step back, as it's working its way up in that direction. And if it ends up going down, it does the same thing. It kind of does 2 steps forward, 1 step back. And so it has this rhythm, this kind of give and take. That's because there are hundreds of thousands of individuals, corporations, institutions, and hundreds of thousands of transactions taking place. And so there's just this ebb and flow, living, breathing kind of, it's more of a flock of birds type of behavior that's taking place. And so this is normal. So this kind of a move in one direction and then a pullback 30 to 60% is very, very normal. And so that's a separate topic of Fibonacci levels, but it's effectively just proportions. It's found in nature. We have it everywhere. It happens here. So this is really nice. It pulls back into this area. There's a separate video that I actually did on this when it was topping out over here, how we could read it. I've been following it from all the way up here to when it was topping out and highlighting where it was going to go. I'll put the link of that up here so you can watch that. I want you to do that because I'll continue to do it as we go. And what I'll be looking for here. So we then had another move up. Now this is important. The fact is that at this point, the market failed again, roughly in the same area. What does that tell us? That tells us there just aren't any more buyers up here. Forget about fundamentals, forget about all that crap. It tells us there just aren't any more buyers above that point, whether people don't have faith in it or whether they don't have money to buy, but they wish they could. There just isn't enough up that. So above that, there's not enough interest above that level at that price. That is maybe for now, maybe the price, the highest it can be. Like no one's going to pay more for it. It's just that's the market has collectively agreed this is kind of, it's too expensive above that. So the thing though, is that when it gets rejected a second time, this is just general behavior in the markets. It generally has a correction, a bigger correction. So in other words, it tries once and fails, and then maybe it tries again and succeeds, or it tries again and fails again. But the second failure is a signal to the market that, wow, I really am not that strong. It actually increases the fear, and so you often have quite a bit of a deeper correction, which is why it's slowing down here. It's heading down, but it's likely to come back down towards this area. So there's only a couple of things that can happen now. I don't think cryptos are going to go away. I think they're going to stay. And so I think that there's only a couple of options that can really happen at this point. It can range. So that means it stays within this range. So in other words, if a stock becomes overpriced and it's tired, it's had a really good run, let's say Tesla, it has a couple of different options. It can have a big correction to the downside, come back in. All of a sudden it looks very attractive to buyers. People have taken their profit. People who were foolish and greedy and jumped in at the end have paid their price. So you wheedle out the rats and mice. Or so this has a nice correction and then it's ready. It's like rejuvenated and then it's ready to carry on. Alternatively, it stays roughly where it is and it treads water. So now it's in a way it's recouping energy. It's effectively spent a lot of energy going back up. It's now recouping a bit of energy, but it's not weak. There's a lot of buyers underneath a certain area that are keeping it propped up, but there aren't enough buyers above a certain area to keep it going. And so what can happen then is the market, instead of just having a big correction, it can actually range for a while. And it ranges and ranges until it reaches, a point where the market is now, the appetite has rejuvenated and then it carries on. So there is a very strong possibility that this could range. How will I know that? If it turns at the bottom here, which I will only know for sure within the next 2 or 3 months. So that tells me for certain that I don't have to worry about it. It's January 2022 now. I don't have to care about this until March, at least, probably not April. And so my expectation is, will it come down? Will it produce similar rejections off these levels? If it does, that's good. And then I need a swing low. I need a nice green, big, strong buyer's candle to come in. Tells me all the buyers are returning to the market. And then I need a follow through. So the buyer's candle, the bulls returning, the buyers returning is not enough. There has to be a follow through. So then the market has to attempt to climb higher. And if that's the case, it's going to go back up to 60,000. Now, does that mean it's going to continue on from there? No. If it's range bound, we are usually only at the beginning. Chances are that when it gets back up here, it will sell and come back down again, potentially. If it turns higher and higher and higher, in other words, every time it comes down, it turns around higher than the previous ones. That's a great sign because that leads to a breakout. So do I have any draw tools on me? No, but let me put it in. So let's say that it turns where it is here, doesn't come down, doesn't connect with this, goes up to here, comes back down to say here, perhaps goes up like that. That is a really, really good sign. That usually, and again, that would be next year. That would be a year from now, April 2023. That would imply a very strong likelihood of a breakout. And if it broke out at that point, it's probably going to go up towards 80 to 100. If that's one scenario. Alternatively, if it just keeps ranging within this range, same scenario could potentially happen at some point. Could it break down to the lower side? It could. To me, and this is how I look at this, if I have no money involved in this, if I had never put a penny into Bitcoin, I'd see that as a buying opportunity. I'd be like, holy cow, I can't believe it. I can't believe I'm this lucky. Bitcoin is coming down and I'm going to be able to buy in at this level that I missed. I don't think that's going to happen. I think it's the least likely option. I think that it's probably going to try and stay above this option. Judging by this reaction here, 30,000 is a solid level. 20,000 is also very good. So I would see those as buying opportunities. If I have money in this, if I bought at the top, I'm going to be sweating bullets. I'm probably going to bail. That's what some people would do. For me, every really strong move to the downside becomes, in my mind, a buying opportunity. There's more and more countries and companies that are adopting Bitcoin as a form of payment, as well as others. I'm not seeing any sign of evidence that this would go away. And so therefore, I would see these areas as buying opportunities. And I can mark that. Blah, 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 blah. So I would mark this area as a buying opportunity. So it could potentially be range bound. If I produce a series of high lows, that's more likely to lead to a breakout. And it's going to happen next year. So that what that does is that points to the possibility that this year, we are going to see the market just go largely sideways. Bitcoin is just going to, and other cryptos, I'll talk about that in a moment, other cryptos are just going to range bound. They're going to go up and then probably come down. And then up and then probably come down. And every time they go up, people are hoping they're going to break out and they'll probably reverse and come all the way back down. Next up, let's talk about why we've had a big correction here. Why have we had a big correction here? So when we talk about markets, the indices, so let's go and have a look at the US indices because this is relevant to today. So let's go look at the Dow, the S&P, and the US. They're all having a very strong correction at the moment. They are having a strong correction right now. Somebody will tell you, somebody will say, well, it's due to inflation. That's one of the characteristics, but the reality is it's had a really good run. And as I said to you, every market that has a very good run has to give back some of that. It can't just be, everybody can't all be buyers. At some point, people are going to start taking profit. It's going to have to come back. So this is overdue for a very healthy correction. So think of it as summer versus winter. It's been summer forever. There's no winter. We need a little bit of winter. We've got to have a bit of a spring and then a summer again. We need a strong correction. That market has to take a bit of a breather. It's absolutely, compared to prior moves prior to 2009, even actually after 2009, prior to kind of 2016, the market has moved in such big waves that it's never done historically ever before. And again, there's reasons for that. So it's overdue for a correction. It's highly correlated between that and cryptos. So why is that the case? Why is the correlation so strong between this? First of all, from an institutional investor's perspective, it's seen as another potential money-making opportunity. And they've been killing it the last couple of years. They're able to borrow money at very low interest rates, chuck it into the markets, make a killing, which is why we have more than there's 660 odd billionaires in the US alone. There were only 99 billionaires on the planet in 1990. So this is why we've had so many people whose wealth has gone up tenfold in the last 10 years is largely because of that. And they've put some of that money into cryptos. Institutions have been putting money into it as well. So in other words, it's caught the attention of the big boys, so to speak, the big fish, let's say, not just big boys, big fish. So it's Kathy Woods at ARK as well. And so it's caught the attention of them. And so extra money has gone in on that. And they are way better, believe me, at taking profits at the right time. So when, it's almost always the retailers who are stuck in at the end of it. And they will navigate those turns way better. So the reason I mention this is that to them, it's correlated with stocks. They're going to start putting money in here and here and here, and eventually we've got enough exposure on Apple, we've got enough exposure on Microsoft, we've got enough exposure on Meta, and they'll start going, where else can we put our, we've got profits, where else can we invest it, where can we do that? And they'll put it into cryptos. So when they start taking out money because they're concerned about exposure, they're concerned about a correction, it'll tie up to that. Now, where it gets really interesting is that at some point in the future, there's a very real possibility that there will be more money put into cryptos, or money will flow to cryptos such as Bitcoin and Ethereum when there's a bit of a market correction. That's what I'm really interested in, because the second that happens, because right now it's called safe haven. So we have dollar yen and we have gold. They can often be recognized as a bit of a safe haven option because gold, again, historically is where we've put our money. So there's a bit of a move towards that. So where it gets really interesting would be if suddenly there is a move towards putting money into, say, cryptos, kind of like it would go into gold instead of, coming out of stocks. When or if that happens, that would be basically the all clear that cryptos are now permanently here. But that could happen 10 years from now. Currently, it's not the case. So currently we're seeing that if the markets have a really bad day, cryptos have a really bad day. And that's why, okay, because they're tied to it. So the same people who are putting their money into institutions and big fish are doing that. There's no conspiracy theories, no manipulation. It's common sense. I assure you, if you work in some of these institutions, there's not necessarily as many smart people in there as you think. There are some smart people, of course there are, but it's not all future seeing. So I want you to have a look at this. So we have a nice, really good correction back down into these previous lows. That's for Ethereum. Let's have a look at NEO. So NEO's coming back down towards its lows. Cardano coming back down into this level of support. Don't forget, I do a weekly analysis, so I'll be monitoring this on a weekly basis. I'll be looking to see when it turns around, and I'll be releasing that one tomorrow most likely. But we're coming back down into these old highs. So here's where it gets really interesting. The baby ones, the other ones are kind of hood rats that are kind of following on behind here that are doing this. A lot of them have given back most of their growth. And for people who've, I imagine if I had money exposed in this, I'd be terrified, I'd be bleeding. But usually in these cases, if I was in that situation, I'd probably potentially at least consider holding on to it to see if that then recovers and we're back up. And again, it's tied to the markets. The markets need to let off a bit of steam, but they will recover because principally there's a lot of money right now in the world and there's still stimulus and the governments are still concerned about that. We do need rate hikes. We need to calm things down instead of adding a bit of vodka or tequila to the punch bowl. We need to do that. But overall, there's still optimism. And so we'll see how that goes. We'll see how that plays out. So there's a bit of correlation between that. So I wouldn't really call it quits until I know for sure that the equity markets and the indices are not really, they're taking a really big hit, or until they recover. So at least I would do is watch them recover because so far cryptos would follow that. Based off everything we've seen so far, it's not unreasonable to think that cryptos would follow that behavior and therefore keep going to the upside. Okay, and so I want to wrap this up because it's 22 minutes long. That's plenty for you. I don't want to bore you to death with this. My point is that a lot of the little cryptos have started to kind of give back most of their stuff. They're actually in an area where it's pretty cool for them to probably about now. They could go a little bit further, but they've had most of the fall. And therefore, this is a good area for them to potentially stabilize. Looking at Bitcoin as well, this is a good area for it to stabilize, I think. So as a trader, you always have like a plan A, plan B, plan C. And so I think plan A for me is that this is the area where I would expect it most likely to turn around. That doesn't mean it will. It's just that's what I think is more likely to happen. And we might have a series of these potentially happening. If not, it's just going to be range bound for a while. Is it possible that it could just bounce back up from here and break out? Of course it is, but I'll know that when I see it, as it happens. And it's a monthly thing. It's not going to happen, especially if the equity markets are doing well. But just remember, the equity markets are struggling with their ceilings, their resistance levels at the moment. If it breaks through here, that's still a range-like behavior because right now it's still in an uptrend. It's still produced high lows, high lows, high highs. It's still in an uptrend. You think this is a big crash. This was my issue. This is why I want to do the video because everyone's going, it's a Bitcoin crash. It's not a Bitcoin crash. It's a Bitcoin correction because Bitcoin has been overvalued in the same way that Tesla has been overvalued. And I love Tesla. I'm saying I love their products and I like that we at least have I mean, I worry about Elon sometimes with some of his tweets, but in principle, I wish we had more people like him who just decided, let's just build stuff for the future of mankind. I love that. So my point is that we'll know it as it unfolds if it's going to range. I think this is the more likely option. For me, plan C would be that it actually breaks much lower, comes down right towards these lows. And that would cause a lot of people to lose faith in cryptos. That's the least likely option for me. Nothing is impossible, but I think that's the least likely. I think it's more likely to, in this area, turn around here. I also see these as potential buying opportunities, and I think it's going to head up. However, for me, the major concern is it is not out of this range until it is out of this range, which means to me, depending on how it behaves in this area, we'll confirm that it's ranging. When it heads up there, there is about an 80% chance that it is going to stay within that range and turn around and potentially head down again. So it's very simple. As traders, we treat it as within that range until it actually finally breaks out. And a breakout is not like this. It's a confirmed close on the other side of the line. And we'd have to see that. But basically, it tells me there's no rush right now. There could be some potential buying stuff. If I decide I want to get in here, I have to accept that when I get in, that the move might go all the way to there and then come all the way back down. I have to accept that. And I've got to go, well, I'm in it for the next 10 years, so I don't really care. Alternatively, I ride it back up there, take some profits, and then deal with whatever happens after that. If it comes back down or breaks out, we'll see. But for me, it looks as though this is much more like range-bound behavior for now, and therefore I expect it to turn where it is here and head back up to the highs. And then I still think there's a very high probability it's probably going to come down again. The question is then, will it come down halfway and turn around like a higher low, so it's a higher low, or will it come all the way back down? But also immediately that looks into about a year from now. It's 2023, so there's no immediate rush, so there's no reason to panic. And therefore calling it a Bitcoin crash is just, to me, it's amateur hour to do that. And that's fine. Take their money, go for it. Amateurs are going to be getting out here. Pros will be getting in here. Amateurs will be getting in here. Pros will be taking their money at that point. So I'm just, forewarned is forearmed. Educate yourself and have a look at this stuff. Stay, if you want, subscribe, follow the analysis. You're going to get it every week, and we'll see how it's going. Otherwise, I hope that you found this instructive and useful. I'd love your feedback. Constructive, otherwise, comment in the comment section. And let me know your thoughts, and I'll update it. If anything significant changes in this behavior, I will update this video. But that's it. So anyway, enjoy the rest of your week and weekend.